So was she the head of the house or were you?
No, as the head of the house, I like to direct
Okay.
and guide. Yes.
See, for me, when I go home, it's I'm not directing and guiding. I'm asking permission.
We might be the heads of the house,
Yeah.
but they're the necks.
Yeah.
They direct kind of where we go.
All right. So listen.
Let's backtrack a little bit, shall we? My name is Seth DiBartolo. I'm here with Vito Mira, Community Lending. And
Welcome to our podcast.
welcome to our podcast. Yeah.
So
Kind of shooting the breeze a little bit.
Seth, today we are here to talk about a mortgage loan pre-approval,
Okay.
right? And why would you need one and when would you get one?
Okay.
So traditionally, Seth, can you tell me a little bit about, who needs to get a pre-approval?
So I'm going to start back a little bit further though. The days of being pre-qualified are kind of by the wayside. It's probably more like a tissue. You can blow your nose on it. It's not worth anything. The pre-approval is intricate in the sense that you actually go ahead and take care of all of the upfront calculations to make sure that they can actually afford the loan that they're going to purchase. So the important part is all of the legwork and calculating how much income they have versus how much debt they have has already been done. And it's been approved as, we're going to call it licensed agents of the state. We give a letter to a real estate agent or to a buyer, and the calculation's already been done. This paper is as good as the cash that's written on it.
Okay. All right. So traditionally, how would somebody get pre-approved?
Well, there are a couple of different ways. I always say it starts out with a conversation because really you don't know someone until you talk to them. And a realtor or themselves could call us here at the office, or they get referred to us through one of their realtor networks, and we give them a call. And that's really where it starts, with that basic conversation to say, hey, what is it that you're looking for, the time frame that you're looking in, and let's talk about your income, what you're doing for a job, and really pretty much what debts you have, and we'll do that calculation kind of in our head as the pre-qualifying process.
All right. It's I'm scared of applications, right? It sounds
Sure,
really
sure,
scary.
yeah.
So do I have to pay for this application? Is
So
this
no.
something I just do over the phone? Do I do it on the internet, or is it in the mail? Like how does this happen, and how long does it take?
As the 21st century is a wonderful thing. It has brought many different resources to us. We do have the opportunity to do it over the phone. So if you want to get step-by-step questions and answers, so we can fill out the application manually. If you want to meet in person, we can still do that too. We're always here. Someone's always at the office to help you with that. But particularly, one of the fastest ways to streamline the application is to do it over the phone, where they can go and download the application, and it has every question that we're going to ask. It's already pre-written there. They answer it the way that they need to in order to get the approval that they are looking for, if it's a primary residence or a secondary home. But through the portal itself, all of the documents in that app go directly to the portal, I guess is what I'm trying to say.
Okay.
So that it's a simpler and more efficient, streamlined application process.
Got it. So one of my favorite parts about our app, right? Because we have our own community lending app,
yeah.
is our LOs will email or text message a link to download our app on their phone.
Of course.
When they have the app on their phone, it will allow them to apply. And by applying, you're just answering
Those
questions.
basic questions. Right?
Questions. Where do you live? Where do you work?
How long have you worked there?
How long have you worked
Bank
there?
account, what do you have? How much are you looking at putting down? If you're looking at doing a conventional versus an FHA loan.
Buying or refinancing?
Financing, buying, refinancing, any of those questions.
So
are there.
within 7 minutes of downloading this app on their phone, they can fill out a complete application that does not cost them anything.
Exactly.
They can upload the requested documents because the application is smart. If you tell the application you work for Starbucks, it says, hey, send me these documents, and it gives you places to upload the documents. Makes it very, very seamless. And it communicates with you.
Not only with you, though, it also communicates with the realtors, too, because they're on board, and the app itself can be co-branded for any realtors that are interested in getting this app and sending them this streamlined application.
So one question for me is, well, you're sharing stuff with my realtor. Do you share you share my private personal information with them?
No, all of this stuff is kept secure in the portal, and that's one of the benefits too, because everything directly from the application goes to the portal. We don't have to deal with one-off text messages or emails saying, "Hey, what's your bank statement here? Oh, it's got an account number on it." Everything in and of itself goes in the portal to the portal, and it doesn't have any other third-party access, as it were. It's very secure.
Awesome. So my realtor can't see my social security number.
No, they can't.
Or more importantly for me, like my weight on my driver's license.
No,
because it's obviously not correct.
Of course.
All right. So Seth, a lot of people don't know the behind the scenes. So what you're telling me is you're going to send me a link. I'm going to download an app on my phone. I'm going to fill out an application that's going to take me 7 minutes. It's not going to cost me any money. I'm going to upload my documents, and then I'm going to get a pre-approval in how long?
Well, it depends. Some of us can get it done in about 25 minutes, half an hour maybe, or some of us
so
a
it's
little
super
longer.
quick.
It's definitely super quick.
Okay.
If we're in the process, we've been educated properly, we really only need 7 basic things.
What are
And
those?
the application in and of itself does take care of a couple of those. We've got your work history, we've got your address history. And the reason why we need your work history is we want to make sure that you can afford the house that you're going for.
That's valid.
We also want to know your address history, because if you're looking at keeping your house, or are you looking at selling your house, or if you were a renter, we kind of need to know those basic informations. The other part about doing the application is that in and of itself, it does give us permission to pull your credit. And without that, we really don't know where you are on the debt to income scale with exact numbers to give you that very coveted pre-approval. When we're looking at this, we, as you said before, we've got your bank statements. Those are something that we're going to need, but we're going to need 2 months of those to make sure that you have the assets required for the down payment and the closing costs.
Okay.
Let's see, above and beyond that, we'll need your W-2s, as we said before, your 30 days worth of pay stubs. So if you get paid once a month, we only need 1 paycheck. If you get paid up to 4 times a month, we need all 4. So it just varies depending on the individual. But the cool part is about that app is it'll tell you exactly what you need. It gives you a task list at the end, which again helps you check off that list and make sure that we get all the documents that we need to do that calculation properly.
All right, great. So you're telling me I fill out an application, I'm contacting in connection with my loan originator, and the pre-approval process is pretty fast.
I want to say within 30 minutes of the last document that we receive, we're probably able to get you that pre-approval letter.
Okay.
Yeah.
So, I'm going to buy a home on Saturday. Should I just wait until Saturday night to fill out my application?
So buying a home on Saturday and waiting until Saturday, it doesn't give you that ability to have that pre-approval letter, and it does make us rush. But if you do have all of the application, I would say Saturday could be possible. But
I'm going to re-answer that. I'm like, hey, listen, guys, if you're going to buy a home this weekend, let's get you through the process.
Let's make sure you know your numbers.
Well, we have that whole support staff in the office. We may have some underlining questions that we want to go to the underwriter with on your deal, right? So do your best to be prepared. If you know you're buying a home, these pre-approval letters are good for 90 days. We can easily update them after the 90 days. Sometimes that takes some new documents or a credit pull, depending on the situation.
Sure.
But let's go ahead. As soon as you know you're going to buy a home, let's fill out the application and start the process.
I was going to say in this current market, actually, we do have a program that will actually help streamline the application too. It's called Almost Home, where we get all those documents in. We can actually send you to underwriting even before you have an address to a house, which then shortens the amount of time, and you can actually go to give that offer with what's called a conditional approval. So you have your pre-approval as well as that conditional approval to go ahead and streamline.
We're going to do a
closing.
whole nother podcast.
All right. Well,
on the Almost Home pre-approval. It's going to be amazing.
That'll be fantastic.
So we just talked about a W-2 employee. Yes. I think that's like the easiest one of all,
I think
right?
it's the one that's simplest that's in the box. Yes. But are any loans the same, Vito? That's the question. Have you ever seen one? Exactly
I have a W-2 and a pay stub and money in the bank. Those are the easy ones,
Those are the golden ones. But yeah.
What if I own multiple businesses? Can you still do my pre-approval in 26 and a half minutes?
26 and a half minutes? I'm going to say probably not. We're going to have to dive a little deeper. As someone who's self-employed, we would need 3 months worth of the bank statements from the employment, meaning if you own your own company, we'll need 3 months statements for that.
Okay.
We'll also need a P&L, a profit loss statement. We can normally get those by talking to the accountant if you yourself don't have those on hand. We can take that as well as some other calculations that we'll need with regard to the other documents that we've just received. In this process, the portal itself would actually request that you give your 1040s so that we can see the returns and do the calculations based off of your Schedule C or your 1120 or your K1, just based off of those particular tax documents. And if you have any other questions, we could fill those out or answer those there with you. As well as, again, we like to make the connection because it's about the relationship, not the transaction. So by talking to your accountant, we can inform them these are the things that we're going to need for self-employment purchases.
Right. Yeah. So traditionally, when I'm pre-qualifying a self-employed borrower, I'm immediately looking for 2 years tax returns.
Right. Almost a necessity.
Yeah. The good news is with some of these programs, you might only need one, right? So once we analyze the application, we could say, hey, in this case, we only need one, which may help you qualify or not, right? So 2 years tax returns, going back to the P&L is scary for me personally. Like, and I think my borrowers are like, oh my gosh, P&L, is it audited? Is this going to cost me $1 million? A P&L could literally just be a piece of paper that says P&L up top, right? And it's dated January 1st, 2022 to July 1st, 2022. And then you have like accounts receivable and expenses and then profit and then signed and dated. That's as easy as a P&L
it gets. Yep.
I've had borrowers Google P&L and grab a template and just fill it out.
Of course.
Right? Because
it's a fairly simple process. And again, we're here to answer questions. We deal with it daily. And so to have that, again, Google is always a great tool to get any templates that we might need to help them out.
So what about those who they have no job? They're retired. They have pensions and Social Security income. How hard is that to document? Can they even buy a home?
Yes. So if you're retired, and we do thank you for your years of service in the industry, your vocation that you had, but we do see that with retirees, they often do have pensions. So we would need the pension statement. We can also look at that. We can see that they're getting regular income through their bank statements. So again, it's important to have those bank statements. But the W-2s, every year you get an award letter stating exactly how much you have or how much you're going to receive. So we can use that as, I'm going to say, assured income. And we can use that plus the pension and see what you qualify for based off of the credit report and the like for those calculations.
Cool. I've even had borrowers who have no retirement income, but they have a bulk amount of assets, right? So, I've got $4 million in my, not me, okay, we're not talking about me, but borrower A has $4 million in his Merrill Lynch account, which he's not taking any draws from because he doesn't need the money, right? So some of our programs just allow us to do some basic math and give him credit for income based on his assets.
Right. And so those are the buy down programs to make sure that they can afford the house that they're paying for. So if they don't have a pension or not receiving Social Security, but not drawing on their retirement account, then we can do those calculations and give them that as income.
So what if most of my income comes from rental properties, right? Are you just going to take a copy of my leases?
So it depends on what we're looking at as far as rental income. Are you purchasing a rental income? Because we do have some programs that will allow you to also do a rent schedule off the property that you're purchasing. Let's say you're going to purchase a duplex and live in one side. You can get a rent schedule to offset your debt to income on the other side. Your particular scenario, if you've got 2 or 3 houses, well, those are depending on how many years you had. We're going to have to look at your tax returns and see in that line item there. I can't remember it off the top of my head. But right there, you're going to see exactly how much you've made off of each of the rental properties.
So I think what Seth is telling us here is just because I'm collecting $3,000 a month in rent doesn't mean I'm going to get credit for $3,000 a month. Well, why? Because I have taxes, I have insurance, I have principal and interest. I've done capital improvements to the property. So my $36,000 a year in rental income
might be 24. Who knows?
Might be 2,400.
Yeah, 2,400,
right.
Depending on how much you write off.
So some properties people have owned, we're going to use their tax returns. But Seth also mentioned, that a property I'm buying. Let's say my debt to income is really tight, but I'm buying an investment property in Florida. we can actually use, and you mentioned rent schedule, which is a big scary word to me.
It is.
We can use projected
There you
rental
go.
income from the appraiser. So the appraiser goes out there to put a value on the property, but he also puts a value on the monthly rent. So then we could give the borrower a portion of the projected rent to help them offset the payment to help them qualify.
And that's even before they even have a lease agreement with someone.
That is basically
Phenomenal.
just on the appraiser's word. Hey,
Right.
this house is going to rent for $2,000 a month. We get to give you credit of $1,500 a month to offset the payment.
Perfect. Yeah.
And a lot of people think, oh, I can't buy a rental property. I can't afford it because they've heard debt to income in the past, right?
Right.
Well, now they can qualify. All right. So I think we've got a lot of good information today. But lastly, I want to talk real quick. We hear a few things here. We've heard pre-qual.
Okay.
We've heard pre-approval.
Mm-hmm.
And we've heard loan commitments.
Right.
So if you want to just quickly, Seth, tell me what a pre-qual is.
So a prequel is that basic, I'm going to pick up the phone. I'm going to talk to you a little bit, get to know where you're looking, your price point, about what time frame you're looking at purchasing. But particularly, I'm going to ask you the rough numbers. I'm going to say, how much is it that you make a month? Okay. How much debt do you think you have? So as we're going through, if we see you've got $2,000 worth of income, and let's say a car that's $900 a month, or above and beyond that, credit cards that could be upwards to $300 a month. Now you're talking something that's over 50%. So we might be looking at a different loan program based off of that. We'd have to maybe give them an application to dig a little deeper. So that might be the pre-qualifying them to complete the application itself.
All right. So here's what I'm hearing. Mm-hmm. So traditionally, as a loan originator, when I do a pre-qual, first of all, I don't issue pre-quals. I don't send a borrower out shopping with a pre-qual because I feel like I could let their family down. I feel like I could let their children down because I'm giving them a piece of paper that says, I think I can get you a loan. That's what a pre-qual is to me, right?
It's not really that in depth. It doesn't really have all those calculations that we do for the next step, which I know you're going to.
I am going there, but
pre-approval.
But real quick, I think loan originators do a pre-qual in their mind when they're originally speaking to a borrower, just to make sure it's worth the borrower taking time to fill out an application. So Seth, let's just pretend I'm calling you and I'm like, hey Seth, I'm on Social Security.
Okay.
And then, the first thing Seth's going to ask me is,
do you have a Social Security award letter to show that, or roughly how much it is?
Well, perfect. Yeah, Seth, I do have an award letter. I'm very proud of it. I get $800 a month in Social Security, and that's my only amount of income.
Okay, so if that's the only piece of income that you're receiving at $800 a month, then let's talk a little bit. Do you have any credit card debt? That might be the next question that we go to.
Well, most of the time in my case, when I'm talking to this person, they have a Ferrari, and their payment's about $800 a month.
Well, that's 100% debt to income.
Right. So I think where we're getting here, right, is we're having this conversation up front so that we don't have you apply if we know, in fact, you don't qualify. But what we will do is we'll give you options, right? So a lot of times it's like non-occupying co-borrower or reducing debt.
Right.
Or more money down.
Exactly. And
because $800 a month qualifies for a mortgage.
It does.
It just might not be a mortgage that...
With a Ferrari.
Well, maybe.
I don't know.
All right. So now that we've gone over pre-qual, pre-qual is a letter that you would receive if a loan originator has asked you questions
and thinks that you might be able to.
He can get you a loan. This is not something I would ever do.
Because it doesn't really hold that much weight. Because if you've got other, let's call them mortgage originators or other realtors that have these letters from these other institutions, those are going to hold a lot more weight than a pre-qualifying letter.
All right, so let's go to level 2.
Level 2, the pre-approval, my favorite.
This is the one we typically do, right?
This is the one we do all the time.
All right, so tell me, what is a pre-approval?
So we get your application, we get your credit report, we get your bank statements, we get your income, whatever that looks like, whether it's pension, whether it's W-2s, whether it's Social Security. We do all of these calculations and we see the bottom line number, how much you can afford per month and still be within whatever particular loan program we're looking at, whether it's conventional, FHA, or VA. All of them have different criteria and different thresholds that they use. But basically what this is saying is, this is the price of the house. This is how much down you're going to put. This is how much your principal, your interest, your taxes, and insurance, and HOA. We even go as far as seeing how much the exact number is per month that you can afford.
Yep.
So if your taxes are low, but your HOA is high, you still might be able to qualify in there. If you don't have an HOA, but your taxes are high, you probably still qualify. It's the bottom line number.
Then big scary mortgage words, HOA.
Yes,
What does HOA stand
the
for?
Homeowners Association.
Yes.
That,
Okay. Just
lovely monthly.
some people
debit
just
that
don't know.
comes.
All right.
Yeah, that's
so
perfectly fine.
So to sum up pre-approval's the one that we typically do here at Community Lending, right? It's a letter basically stating that a loan originator has reviewed tax returns, W-2s, pay stubs, bank statements, ID, and they've said, hey, I can get you a mortgage loan. All right. Now, we're going to take that one step further.
My second favorite, I love pre-approvals, but what we've started with, and we're going to talk about it much more in depth, is the Almost Home program, which will get you the loan commitment.
Commitment. That sounds like a relationship.
I know, it's almost like a marriage, right? Yeah. It's saying that we believe and we know that you can afford this because you've also gone through the next step, which is underwriting. So people are maybe stepping back a little bit saying, hey, but I don't even have a house. How do you do that? Well, there are two things involved here. There's the items with the house, but there's also your finances. We take your finances through the underwriting process to say, for example, we go through and we find out that you say that you're unmarried, but you were recently divorced. Well, underwriting might catch that and say, well, where's your divorce decree? Do you owe any extra money? Is
child support,
alimony, right? Alimony. And so if you say, well, no, I don't owe those, and oh, here's that documentation. I didn't know that you needed it.
And real quick, in my case, if I were ever to get divorced, it would be child support, alimony, more than half of everything I own.
Correct, which could affect your loan.
I would not qualify for a loan because all of my future pay would be assigned, and I'm going to use that word. All of my future pay would be assigned.
So when we see these things,
it would literally be assumed that my future pay would be assigned.
Okay. And that's important. And those are the things that we look at. When we do the pre-qualifying, we do ask those questions. When we look at the pre-approval, we might see a pay stub, but we might be looking at the bottom line and not necessarily everything that's deducted.
Like a payroll deduction. A loan.
Exactly. Or a self-loan or something like that up front, whether you're paying back your IRA. Well, if we're paying back your IRA, we need to know what those loan terms are.
Right.
Sometimes they're very minimal, if at all, but those are things that the underwriter will catch and validate for us. So once we come back, we get this loan commitment, but it's called a conditional approval. And those words are very lovely because it says you are approved pending these conditions.
Right.
Simply put, you fill out the conditions, you've got yourself a house.
So on the last one, and this is the one that I would want for my family, right? It takes a little bit more time because we're going to underwriting. And by a little bit more time, we're saying a pre-approval could happen. It will happen same day by a loan originator, right? So he reviews tax returns, W-2s, bank statements. He issues a pre-approval letter. Well, in the underwriting case, we send you documents. You sign them. It gets in line for underwriting. Right. Underwriter issues a loan commitment. She may have a few questions, like
could take 48, 72 hours, 3 days. I mean, it's still
right.
And that's all before the weekend.
Yeah.
So going back to our scenario, if you want to buy a house on Saturday, let's talk to you on Monday, Tuesday, get you in, and possibly by Thursday, we'll get your loan commitment.
So for just to go over the loan commitment one more time, this is the best of the best. This is as far as you could go up front without a property. So you've completed an application. You've submitted all your documents. The loan originator has said, hey, we're going to send your loan to underwriting. They've put you in line. The underwriter has reviewed it. They've signed off on all borrower conditions, IDs, pay, income, credit. And they have conditions on the loan for a purchase contract.
Purchase contract and appraisal, which we're going to need. We need to also bind your insurance.
That's it.
And then we're done.
So put yourself in a seller's shoes real quick, right? This is what super excites me is when you present two offers to a seller and one of them is a pre-qual that the loan originator hasn't even looked at W-2s, pay stubs, or credit. And the other is a completely underwritten loan.
It's a bona fide loan ready to go, just needing those.
It's only conditions or an appraisal and a contract and homeowner's insurance. This is basically like cash, guys.
And you can shorten that contingency period too to say, we already have the loan commitment. We don't need those 30 days to receive that commitment.
Right.
And so it does make it a little bit more appetizing for the seller to say, I'm going to go with the one that's already conditionally approved.
All right. Well, I think that's about as much time as we have today. But Seth, real quick, I want to circle back. I want to circle back on Seth real quick, right? So Seth is what I would say has become a very successful loan originator.
Thank you.
Right. And not so long ago, we were teaching Seth how to spell FHA.
Mm-hmm.
How many years has it been?
It's only been 2.5 years.
2.5 years. So I want to go back to, so most people that know me and are friends with me know I have a passion, and it's scuba diving. And I was at the scuba shop, and when I'm at the scuba shop, I'm on a mission. I'm getting my scuba tanks, I'm measuring stuff, and it's my hobby. But Seth was there one day, and I'm in the scuba shop a lot, so I know, new faces, and Seth was one of them. And he approached me about mortgages and about insurance, because that's the business he was in. And I want to say one thing about Seth, right? So Seth hunted me for many weeks after, to the point where, Seth wanted to get into the mortgage industry, right? And it takes a lot to teach a mortgage person how to be a mortgage person. So traditionally, we don't really like to do it because it's a lot of effort. But with Seth, it was like, can you imagine, realtors, if you give Seth a lead, he will hunt them until they connect, right? And that's kind of the first thing I saw about Seth, is he followed up continuously until I responded. And not only that, as soon as I gave him a roadmap of, hey, these are the things you have to do, he did them. And then he followed up continuously until I was like, listen, if you treat our customers just like you're treating me, you're going to be wildly successful. Because the one thing in our business that we're missing every single day is follow-up. Yeah. Right? So I'm so glad you're part of the team. I'm glad you bugged me every single day until you became part of the team.
I thank you for the opportunity to serve.
And I'm literally, you're out producing me today. Which is not fun for me to say that, because I feel like I'm not really happy about that. But listen, guys, I want to thank everyone for being a part of our podcast today. Reach out to us at communitylendingfl.com. You can reach Seth on his personal cell phone number at
239-896-8481. I'm here to help. Call to serve.
All right, guys.
If you have any questions.
Love you long time.
Take care.